Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to talk about how you can use the advanced decline line to determine market conditions. Okay, and what I'm going to get at is that even if you didn't have access to the S&P 500 or the NASDAQ, if you simply looked at the way the tick was acting, the day-to-day prints, you would in a backwards fashion be able to tell what kind of market we have in front of us. The advanced decline line acts a certain way when the market is healthy, and it acts differently when the market is not healthy. So I don't want to say it's easy, but it's pretty straightforward to look at the day-to-day prints of the advanced decline line to determine what the general market conditions are. So let's go through some examples here and you'll be able to tell what I'm talking about. All right, so here is up top we have the S&P 500. Down below we have the day-to-day AD line prints. Down below we have a horizontal line at plus 2,000 and at minus 2,000. You can see 0 in the middle. This particular chart goes from 2021 until today, so it covers about 18 months or so. All right, so you can see we have an uptrend on the left side, we have a downtrend on the right side. So let's look on the left side. So while the market is trending up, the AD line, we have a high print there, a high one there, a high one there, a high one there, a high one there, kind of a high one there. Okay, so over the course of an entire year, you have a couple of high prints, not that many considering how strong the market was, and then you have a low print here, there, 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 there. Okay, so generally speaking, when the market is doing well, you have a void of extreme prints. Okay, the up days are pretty good, but they're not stellar, and the down days are bad, but they're not that bad. Okay, there's definitely a void of extreme prints. Now let's move and look at this area here as the market was topping. What we see here is, even though we're still in an uptrend in this blue box, we have a higher print here, higher print here. We have a low there, a low there, a low there. So even though the market is still trending up, we're starting to get, in a matter of about 2.5 weeks, we have several extreme prints in both directions. That tells us something is changing. Then moving more towards the right, it's pretty obvious that during a downtrend, we have a lot more high prints and a lot more down prints. Okay, so we have boom, boom, boom. I'm not going to highlight all these, but there are many high AD line prints and many low prints too. Okay, so in an uptrend, there's a void of extreme prints in both directions. And in a downtrend, there's an abundance of extreme prints in both directions. Okay, so in an uptrend, the market tends to move up slowly and quietly and without much volatility. Okay, in both directions. And in a downtrend, the market moves down violently with a lot of volatility, and there are big prints in both directions. All right, let's look at another example. Here is, again, this is the S&P 500 up top. This is 2019 here. Here's 2020. So this chart is about 15 months. Okay, so you can see the market for the entire time of this entire time the chart covers, is essentially moving up. There's a little bit of a dip here, a little bit of a dip there, a little bit of a dip there, no big deal. And you can see here, the entire chart here, there's not a single print at 2000 or above. And then down below, there are a couple prints down at 2000, one there. Okay, a couple when the market pulled back, but not too many. I mean, there's only like 3 or 4 for the entire year. Okay, so when the market moves up, it moves up calmly and slowly, and there's a complete void of big up days. That means when the market moves up and it's healthy and it's strong, up days are decent up days, but they're not huge up days. There's no huge extreme plus 2000 AD line. Okay, and then you get an occasional move down where you get a low print, but they're few and far between. They just don't happen very often. For the most part, most of the prints are hovered in the middle, plus or minus 1,000 or so around zero. Okay, this is a telltale sign of how healthy a market is. Let's go to another example. Okay, so this is 2018, and that's 2019. So basically, this covers 2 months into the end of 2017 and then all of 2018. Okay, if you remember, there were, 2017 was a good year. The market went up, up, up. There were a lot of divergences that were forming over here, a lot of warnings. And then what we have here is we have, low print, low print, low print, low print, low print. So we definitely have some extreme low prints here as the market was falling. Okay, not a surprise. But then notice that the market then settles in. There are no more, let me delete that. There are no more extreme down prints over here, and there are no extreme up prints over here, which kind of tells us that even though the market had backed off and wasn't extremely strong at that point, it probably wasn't going to keep going down, okay, because there are no extreme prints. If we would have gotten extreme prints here, 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 chances are the market would have continued down. But because there was a complete void of extreme prints in both directions, that told us the market probably was going to stabilize here and then move up, which is what it did. Then it moved up here, and you can see all the data points are just bunched in the middle. Okay, there are no extreme prints in either direction. Then moving to the right of the chart, obviously the market breaks down. There were lots of divergences that formed here. It was easy to tell that the top was coming. And then whether the first leg down is just going to be the first leg down, or whether it was going to stabilize and move up, was going to be partially determined by the tick. So we get extreme tick here, extreme here, boom, 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 and that's on the way up. Okay, so once the downtrend started, the fact that we were getting these extreme prints told us that there probably was going to be some more downside coming. And if you compare that to the left side here, where there were no extreme prints, you can tell a difference. You can tell, and if I were to do a review here, if you were to tell if you were to compare this and this, where here there were no extreme prints, but here we were getting extreme prints, and we didn't get very many over here. We just had, this one, and that one wasn't too high. Okay, so there's a little bit of a difference between the 80 line getting compressed in the middle versus these volatile swings over here, which told us that this, on the left side, the market was probably going to resolve up, and on the right side, it was probably going to resolve down. All right, let's look at one more example. Here is 2015 is there, 2016 here. So this chart covers about 18 months. All right, so what happened is the market was trending up into 2015, and then it spent all this time trading sideways in a range. Okay, so you can consider this to be, consolidation pattern within a range that most, the trend was up, so most likely it was going to resolve down. But we started to get some warnings here. Like even within an uptrend here, we're starting to get lower print, lower print, lower print, lower print, lower print. Okay, a couple higher print, higher print. So even though the market was generally consolidating within an uptrend, the fact that we started getting some of these low prints tells us there's a little bit of fear in here. There's a little bit of nervousness. Okay, so not a surprise that the market eventually went down. So it comes down, does a double bottom, goes back up, and then while it's consolidating over here, we still have low print, low print, low print, low print, low print, low print. We have high print, high print, high print. Every single one of these ticks that I just showed you took place while the market was in consolidation mode. So anyone who thought that we had double bottom, move up, consolidate, maybe we can break out from here, the fact that we were getting these extreme prints from the 80 line told us that there's some nervousness beneath the surface, and the market probably was not in a good position to break out. And so no surprise that it moved down. And you can see that there are a lot of low prints here as we move down, a lot of high prints over here as we move down. That's a telltale sign of a downtrend, as you get extreme prints in both directions. Then the market moves up and enters consolidation mode again. So let me delete this stuff and highlight this. Let's talk about the difference between this and this. So over on the left side, you have a lot of, down prints. Boom, 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 boom. I've already shown you this just a second ago. But over here on the right side, there are no extreme prints. There are no extreme prints. Okay? So not a surprise that this resolved down and this eventually resolved up. The lack of extreme prints over here told us that an uptrend was probably going to start again. Okay, so the takeaway here is that when the market is healthy, good days are pretty good. They're not great, they're just pretty good, and bad days are bad, but they're not really that bad. There's a void of extreme prints in both directions. When the market is not healthy, good days are spectacular. Everyone's just piling in, up, 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 up. The market's posts a huge gain. The AD line is up huge. And bad days are horrible. Okay, same thing. Just selling, and the AD line drops to minus 2,000. So there are extreme prints in both sides. So this is important to know. Even if you didn't have access to the S&P and the NASDAQ chart, you can just look at the day-to-day prints of the AD line, and you could be able to make a pretty good guess as to whether the market is healthy or whether the market is not so healthy, whether it's going to trend up, whether it's going to trend down, whether there's trouble brewing beneath the surface, or whether the coast is starting to clear up. Okay, I teach this and a lot of other topics in my masterclass, which is available below this video. I hope you got something out of this, and I'll see you next time.